Hello everyone, thanks for watching. As always, I appreciate you being here. Today we're going to speak about something very important, and that is setting dividend goals for yourself. So I'm currently making about $1,538 in dividends, which is $128 monthly or $4.22 daily. Now when it comes to my goal, my personal goal is to make $20,000 a year, but I think a lot of people underestimate what that would take or how to calculate that. So I'm going to go ahead and show you how to calculate that right now. So simply to calculate how much you would need for your dividend goal in capital, you would simply take your expected dividend, that's your goal, so $20,000, and just divide that by the average yield here, so 2.34%. And so we get, if nothing else were to change and my average yield were to stay at the current yield, I am not accounting for dividend growth at all or changing dividend along the way, I would need $854,000 roughly. So when you consider your own dividend goal, you need to probably also consider how much capital you need to have invested to achieve that. And when it comes to dividend goals or milestones, usually it's the nice round numbers that are basically stated to be a goal or a milestone. So you could kind of see here on the community or dividends from Reddit that a common milestone is $100 a month or about $1,200 a year. And you may have this milestone yourself, or you may have a higher milestone, which is $1,000 a month or about $12,000 a year. I feel like these are very achievable milestones, which is partially the reason why people pick them. And I think a bigger reason is because it is more common. Everybody can think of, like, in terms of earning $100 a month or $1,000 a month. It's consistent, it's a nice round number, it is easy to think of. So when speaking about dividends or dividend goals, there's basically two important things to keep in mind: the amount of capital that you have, and also your average anticipated yield. So I'm going to run my goal through some common ETFs that are traded in the dividend community and show you what my capital needed to achieve that goal of $20,000 a year would be with these different ETFs. So again, I'm going to put my dividend goal in and then just divide that by the average yield as a percent. So if I wanted my $20,000 a year goal, I would need to invest about $551,000 into the fund SCHD, which is, again, really common. So I would need far less than what my current anticipated capital would be if I were to invest into this ETF. Now I'm going to do the fund SPHD, another popular ETF. It pays monthly and it also gives a higher yield. So I need even less, about $471,000. And the final one we have here is JEPI, which is like the hallmark of dividend ETFs. It's become really popular. It's not really even a dividend ETF. It's a blend ETF that pays dividends and also income through covered calls, but I think that's kind of moot because income is income if we're speaking in relative terms. But if I were to invest into this ETF instead of my current allocation, I would only need $182,000 just about to complete my $20,000 a year goal, which is about 6 or 7 times less than what I am currently expected to need in capital to complete my goal of $20,000 a year. So is my goal of $20,000 a year in dividends realistic? It is, and it also isn't. So I have about $66,000 invested currently. I would need about 12 times more to hit my goal, and I do hopefully expect to get as close as possible to that in my lifetime. Now, I'm not going to set like a higher goal or an audacious goal or something that's too far out of reach because I feel like that's demotivating. I think that right now I'm able to see a significant percent change of like a portion of my goal as I invest. So I'm almost, relatively speaking, $500 away, but I'm almost 10% to reaching my goal. and that would be about $80,000 in capital. Now, as time goes on, my yield on cost will probably go up, and also the amount of dividends will be raised every year as my dividends appreciate. And I really want you to keep this in mind, because as I just showed, for $20,000 a year, which isn't even a lot to live off of, I would need over $800,000 invested in capital. And I can always change my allocations again to ETFs that provide a greater yield, but that may kind of deter or stymie my capital growth. And I'm young, and capital growth is important right now. So I am happy with this 2.34% yield as my capital grows, because I'm younger and I have more time to grow my capital. I'm not as focused on yield. But if I were to invest in something else, it would obviously be quicker. But as I showed, even with JEPI, it would take $182,000. And I really want to kind of show you or allow you to take that in, because $182,000 in this fund is probably okay, but at the same time, you're not going to have a lot of growth. And $182,000 for most of America is a significant amount of money. Some people will never see that in their lifetime, saved up at a single point. They may, if they're lucky, of course, see it throughout their entire life, but to have $182,000 saved up at any age, really, in America is a good goal, and even more so if you're younger. Now, as I said before, the thing that is going to help me over time is the dividend appreciation. So year over year, as the dividend appreciates, my initial investments will make me more and more when it comes to dividends. So at the end of it, I may not need $800,000. I may need only maybe $700 or $750, $700, somewhere around there. But even with the dividend appreciation, it is still a significant amount of funds to have invested. And I want you to keep that in mind when it comes to dividend investing. I think that a lot of people, when they make these goals or get into dividend investing, of course, we all want to make income passively, and dividends are probably the best form of income because there is basically zero upfront work when it comes to buying the stock. There might be upfront work when it comes to earning the money, but once you invest it and keep it in there, you don't have to lift a single finger. The company will do as it does and get cash flow and then pay you out with zero input or work on your own. And it's great that people have this intention of basically making passive income and not having to work for it, because I have that belief too, like that goal. But I feel that a lot of people get into dividends and not understand the thing that I just went over with you, which was the amount of capital that you need invested. So even if I'm able to make $20,000 a year on dividends on $850,000 or so, I'll still have to work, because $20,000 isn't significant. It's just a complement to my investments. And of course, my amount of dividends will still increase over time. But $25,000, $30,000 really isn't a lot to live off of, especially today. It is more of just a complement to your salary. And when you see goals like these, people, of course, want the easiest way to get to $1,000 a month in dividends. And their suggestion is not really a suggestion, it's just a statement. They know that QYLD would be around $100,000 to get $1,000 a month, but they're higher yielding options. I know it would be risky, just wondering. And again, $100,000 is a good sum of money, and then they're going to put that into QYLD, which I believe is a NASDAQ covered call ETF. And even this, which pays an extremely high dividend, even higher than JEPI, I believe, it would take $100,000 to get you to $1,000 a month, and $1,000 a month is only $12,000 a year, which you can't even really live off of. So This guy wants to jump ahead to a goal that, one, isn't really going to appreciate his capital, two, it's probably not going to get him out of needing to work, and three, $100,000 is a large sum of money in itself. And you kind of have a few people kind of commenting on this. They want significantly more than 12%. You won't find anything even remotely reliable. The fastest way possible would be new ETFs. They're 60% yields, but they're unsustainable. They recommend all these ETFs or stocks that aren't really reliable or would depreciate. So I think they're just kind of answering his question of the fastest way, but not really speaking about the implication, what that means for their capital. So it really isn't really a good goal. Like, so what, you're making $1,000 a month, but your capital may be even going down or stagnant, and then you're gonna have to pay taxes on that if it's a taxable account. So I just don't think that this is a good idea, and I want people basically with this video to understand that it's okay to make smaller goals and allow yourself to build that up over time. I know everybody wants to earn enough passive income or a significant amount of income to not have to work as soon as possible, but it's better to just allow the process to work itself up, grow your capital, and you'll see a much better investment portfolio rather than these quick goals that don't really do you anything good except possibly make your money stagnant. And this kind of article speaks about like dividend goals and your investment strategy and how to get there. And they go over, there's basically 3 dividend strategies you can consider, which is the high dividend income, which I showed you. Those would be income ETFs like QYLD or JEPI that have low capital growth, high growth but low dividend income, and then also balanced growth and dividend income. I kind of have more of the balanced growth and dividend income. So they kind of agree that there's pretty much 3 ways. Let's see what else they have to say. Which will help you kind of go along to your goal is by reinvesting the dividends and make sure that there's dividend growth potential. I kind of went over that with the dividend appreciation ETFs, and I think a lot of dividend investors may reinvest their dividends already, but if you're not already doing that and you don't need that current income, then definitely reinvest your dividends and don't spend them. And dividend safety, this is kind of what I was going along about before, about picking ETFs that will have a sustainable yield or a ETF that isn't going to depreciate in capital or value. And I'm going to drive home the performance of dividend safety really quickly. I just want you to imagine that you were an investor in Intel. You retired and you put a decent portion of your money into Intel thinking that you're going to get safe, reliable income quarter after quarter. But what happened was they actually cut their dividend. They either had too much debt or their operations weren't steady. There's a bunch of reasons why a company would cut their dividend. This happened to Intel. This happened to AT&T. I'm sure there's dozens upon dozens of examples you can come across for reasons why companies would decrease their dividend. But in Intel's case, they decreased their dividend pretty substantially. And like, imagine if you were retired relying on that income and then all of a sudden it was cut a significant percentage. You would be worried, you would be nervous that you weren't going to be able to pay your bills, and you would possibly sell out of that investment and enter into something else because all this income you thought you were going to get is now not going to be going into your account and not paying your bills. So I'm going to assume that quite a significant portion of those that are watching this video don't have $1,000 a month in dividends. That would be about $12,000 a year. I don't have that. Probably 95% plus of America doesn't have that. Don't feel too bad. It's all a journey. But while I calculate this out, I want you to put your investment, your dividend goals in the comments just so I can get an idea of what the consensus of what everybody wants to earn would be. And while I'm doing that, I'm going to kind of calculate this out and see what $1,000 a month would take, or about $12,000 a year, if you invested in SCHD. You would need $331,000 invested roughly, which isn't too bad, but it is a significant portion of money into SCHD, and it would take some time to get there, but I think that the average middle income earner, average middle class with very limited expenses, 2 incomes, definitely has a chance of getting there at least over their life. So $1,000 a month would be a great goal for, I would say, somebody in like the middle class or possibly even lower middle class if there's 2 incomes. And those in the higher age demographic, I know from the analytics that YouTube provides, there's quite a significant portion that are above 35 that watch my videos. So maybe you're not really looking for capital growth, and you might be saying, well, I don't care about capital growth. What kind of capital would I need if I were to invest in JEPI to get me to that goal of $1,000 a month or $12,000 a year? And you would need $109,000. So that's definitely realistic. I think that if you were an early investor and then you got older, you should easily probably have $109,000 available, provided you started in your 20s and are now are in your 50s or 60s. And JEPI hasn't been around for too long, but I know that there is a mutual fund that exists that kind of does the same thing as JEPI, and it is, of course, stagnant based on the yield, but it is a consistent ETF, and the strategy is relatively sound, so you don't have too much to worry about with this ETF. So that is going to be it for today, everybody. I hope you did appreciate this video. If you did, please kindly like, and if you want to follow along for further updates, definitely hit the subscribe button if you liked the video. And I hope the video provided you some insight into maybe setting goals, the capital requirements, maybe what to invest in to receive higher yield dividends, or what to invest in if you are not so interested in current yield and you want to get that dividend appreciation. So thank you for watching, everybody. I will see you next time, and have a great day.